What's going on, guys? I want to give you guys the two strategies that not only help me trade full time, but help me make over $5,000, $6,000, $7,000 a month from prop firms each and every single month. And, try to do it the best that I can do it, where I'm going to do it consistently. Now, again, full transparency. I'm not taking out $5,000, $6,000, $7,000 per month per one account. I've got a span of funded accounts across two different prop firms. Again, if you guys need some evaluations, Apex is running an 80% off sale. Use code DAnthony. But the thing is this, I focus on very, very small take profits. For those of you guys who already know me, already trading with me inside of Evolution Traders, I might take anything between 3 points. Sometimes I'll take 5 points. Sometimes I'll take 10 points. Typically, nothing ever over 10 points. So there's a reason for, not taking out $2,000, $3,000, $4,000, $5,000 a month from each account on these prop firms. But the way I look at it and the way my mindset works is, if I can have 5 accounts and just take out $1,000 a month, that's $5,000 each and every single month. Now, again, I also trade options. I also swing trade stocks. I invest in swing trade in crypto. I also have 2 other businesses outside of trading. So I'm a firm believer in multiple sources of income. So especially if you have a 9-to-5 job, adding something like $4,000, $5,000, $6,000, $7,000 a month, potentially adding $60,000, $75,000 a year to your bottom line can be extremely beneficial to you. It also doesn't put as much stress on you. A lot of times we get caught in the bright lights and we try to do as we see and keep up with the Joneses, right? Where everyone sees these influencers or streamers where they have 20 accounts or 30 accounts and they're taking out $1,000 times all 20 accounts. Sounds good, but let's start with the basics. Let's start with 1 account and take 1,000. Let's start with 2 accounts, take 2,000. Let's get into the 2 setups that I use. These are the 2 setups that I've been using for quite some time. I believe that anyone can use these setups. You're going to finish with around a 1-to-1 risk to reward ratio. The way that this system is going to work is, for one, we need to figure out on your average winning day, how much do you win? Okay. Do you finish with $100? Do you finish with $300? Do you finish with $400? What's your typical average winning day? Okay, for me, it's around $250 to $350. So if I know that I can take a handful of trades and if they work out in my favor, I can make $250, $300, $350 on the day. Sometimes if it's a great day, $500. If I know that I can do that, well, I want to keep my losses per day around $250 to $350. Why? Because that's going to give me kind of a 1-to-1 risk to reward ratio per day. A lot of people, a lot of traders, they get hung up on, well, I don't really like scalping that way because it's going to take 3 or 4 trades to win it back, right? It's kind of counterintuitive, or, it's not the best strategy. Why would I take, 4 points on a trade and risk 15 or risk 12? It doesn't seem like it's going to make sense. If you know that you can take a handful of trades in the day, and you know that you can keep your days to around $300-$400 worth of losses, and when you're hitting things hot and you're just firing on all cylinders, you can easily make $300 or $400. Your risk to reward is 1-to-1. So if you have a losing day, it's only going to take you 1 day to get it back. If you have 2 losing days, it's going to take you 2 days to get it back, and you're going to pretty much still be able to finish positive on the end of the week. Now, the 2 strategies that I like to use the 1-minute time frame. Okay. I like to use 20 SMA plays. So I'm looking for short-term changes in trend where we're previously trading over the 20 SMA and we get below the 20 SMA. I think many of you guys know that. This is a particular setup today from 10:07 Pacific Standard Time. It was a 3.5 point risk. Why do I say it was a 3.5 point risk? Well, because this reason why candle is only 3.5 points. And notice the big engulfing red candle there is a lot more than 3 points. Now, whether you choose to take 3, 4, 5, 6, 7, 8, 9, 10 points along the road is your prerogative. I don't recommend having a hard take profit. Okay. A lot of times for newer traders, I would recommend it. Set a hard stop loss, set a hard take profit. But if you're at least semi, been in the game for a little bit, you've been trading for a few months, I would not have that hard take profit. And here's the reason why. Because sometimes you get into a trade and it flushes, just like this example here. In this example, flush 12 points. So if you have a hard take profit of 3 points or 4 points or 5 points, but you realistically could have snagged 6, 7, 8, 9, 10 points off of it, why not try to squeeze it out a little bit, right? You're only risking 3 points. Okay, you're only risking 3.5 points. So again, you can let it work for you. The second trade that I like to take and the second setup that I like to take are flag patterns. Okay, so if I'm trading below this 20 SMA, what I'm looking for here is a flag pattern to the downside. And what I like to have is at least 2 touch points. Okay, so if I have 2 touch points, I want to see at least 2 candlesticks have the same touch point. You can see here we wash out, we have a little bit of a bounce here for 5, 6, 7, 8 minutes, and then we break down. And it's this candle, you can do one of 2 things. You can scalp this candle, or what I've kind of been doing a little bit lately is allowing that flag to get broken and then taking the confirmation on the next candle. Same idea, 4, 5, 6, 7, 8 points. You know, as long as it's working and it's working, I'll hold, and then I'll just get out of the trade when I see it start to stall out. If we look at this particular scenario, easy $100 here, easy $100 there, that's a $200 day. If you just kind of go about your business and, you know, rack in these $200, $220, $250 days over the course of 30 days, yeah, you're going to have some losing days in there. And I would say you're probably going to have, over the course of 30 days, you're probably going to have 7 losing days. Okay. If those 7 losing days are going to erase, because we're operating on a one-to-one day-by-day basis, is going to erase 7 days out of the 30, you're going to end up with about 22 winning trading days in a span of 30 days. And if we're averaging, let's say, you know, let's just put a modest number on it. Let's say we're averaging, I'll do a funny number. We're averaging $219 a day, okay, off taking 2 or 3 trades. If we can average $219 a day, again, this is just for the mental aspect of things to kind of play it out. If we can average $219 a day and there's 22, you know, around 22 winning days out of 30 that we potentially are going to win, that's going to be $4,800. Okay. So $4,800 in your prop firm pocket. Now, mind you, you can't just take it all out, right? Because some prop firms only allow you to take half, some prop firms have a cap. But the point is that if you operate on this kind of system, at the end of the month, you can see that it will be easy to take out $1,000, $1,200 for one account. Now, if you're copy trading 2 accounts, 3 accounts, it's $2,000, $3,000, $4,000. And if you want to make more money, just simply scale your business by adding more accounts. Not necessarily by trying to focus on making $1,000 a day. That's where traders run into problems of over trading, because you're too greedy, you're too fast, you're pushing the envelope too much, right? This is a mathematical probabilities business. The longer you stay in the game, the more odds that someone's going to hit you with the ball, right? You ever play dodgeball? The longer you stay in the game, there's a higher probability that you're going to get popped right in the head. Okay. So what we're looking to do is snipe 1 trade, 2 trades, 3 trades. We've got to call it quits. You know, we're up over $200. We've got to call it quits. We're up over $300. We've got to call it quits for this system to work. Okay. The way that I'm explaining it. Here's another thing. The best way to make this system work is to trade a window, a time window, where you can control the ATR, where you can control the volatility. You want to know where you can't control volatility, where it's going to be very hard to stop out for 5 points or even 10 points on the NASDAQ? That's trading the open. What I would recommend, don't even start your day until the end of lunch. Don't even start your day, for me here in California, till around 9:30, 10 a.m. At least, okay, if you can't bring yourself to sit out that long, do me a favor. Don't trade the first hour. From 6:30 in the morning Pacific Standard Time to 7:30. From 9:30 Eastern to 10:30, don't trade that hour. You're going to have a very tough time implementing this system. The whole reason why this system works is because the ATR has died way down, okay, around these times. You're looking at an ATR, which if you're not familiar with it, average true range. If you're looking at an average true range of around 6 to 7 points per candle, you can manage that, because if anything, you can slap on a 6, 7, 8 point stop loss and you can let this thing work for you. And if you can get 5, 6, 7, 8 points, you can kind of trade 1-to-1. Where it's a little bit more difficult to do that is earlier in the session. Okay, so I'm scrolling all the way back here to around the New York Open, or with inside the first hour. And I want you to notice something. The ATR is at 14 points. At one point in time off the open, it was 17 points. It's almost near impossible. First 30 minutes, it was 18 points. It's almost near impossible to escape a potentially losing trade for anything on one mini contract, for anything less than $250, $350, $400 loss. Now, when you start working and applying those metrics and you're looking for an $80 win, a $100 win, but you're constantly taking $300 losses, $400 losses, that makes things a little difficult. That's why I say, ignore all this. You don't need it, okay? You don't need the open. You just don't, okay? If your schedule permits it, wait until lunch. Wait until after lunch. And if you're stubborn and you're hard-headed and you absolutely trade the open, well, by golly, if you win a trade and you make $200, $300, $400, please just walk away from the computer screen, because I already know your biggest problem is revenge trading. Your biggest problem is FOMO. You're seeing setups happen. You want to get into the move. Your biggest problem is over trading when you're already green. I already know that. I've been trading for 13 years. I've worked with over 250 traders over the past 3-4 years inside of Evolution Traders. I've heard it all before. Do me a favor, guys, like, comment, subscribe on this video. If you want to trade with me and the team at Evolution Traders, that link is down in the description box below. If you guys need Apex evaluation accounts right now, there's less than 24 hours left, depending on when you're watching this video. 80% off all evaluations. Use code DANTHONY, DEE, Anthony. You're going to get the best available discount with Apex. I'll see all of you guys on the next video.